Hey guys, it's PK here. Just driving on the way to soccer, midday soccer on Monday. We play five-a-side here in Brisbane, which is always the highlight, or one of the highlights of my week. I'm going to talk about today vacancy. So I know a lot of people right now, they're scared of buying a property, an investment property, because they're thinking, look, there's coronavirus and all this stuff. What if there is no tenants? What if I can't find a tenant? What if it takes me two weeks or 2 months to find a tenant? That's going to be the end of the world. You know, that's going to mean that I still have to pay my mortgage, but I can't get any income coming in. Worst time to buy a property ever, right? So I just want to talk about that a little bit more so that you can be better informed and better educated, because that's simply not the case. Yes, if you are interested in buying an inner city apartment in Melbourne, in Brisbane, in Sydney, or in Docklands, then yep, that's going to be a big issue. Vacancy rates are on the rise there, and I think prices have already started decreasing by 5 or 10, in some places more percent. So when it comes to this fear of not being able to find a tenant, I really feel that it comes from two places. One is the horror stories that you hear from your friends or friends of friends at the barbecue, or work colleagues, investors who got into the property market in a really not educated way, and their horror stories or their stories of making mistakes have been permeated into your own consciousness and your own way of thinking, and now all of a sudden that their reality has become your reality. Okay, so that's one reason I think this sort of fear comes from. And the second reason, or the second way it comes, is, well, quite clearly because of the media. The media obviously needs to sell headlines, they need to sell articles, they need to sell a story. So with them, it's either the property market is booming, and FOMO, if you're not getting in right now, you're going to miss out, or the property market is crashing. Okay, tenants are leaving by the droves. No one can make any money. If you're in the property market, you're going to experience a 6-month vacancy, or tenants are going to trash the house. Prices are going to plummet. It's either boom or bust with the media. By the way, I can look at the camera because I'm at a red light, so it's okay. The reality is that a sophisticated, educated investor knows how to find the right suburb, the right property in any market. A good investor can make money in any market. And when it comes to vacancy, look, I'll tell you the facts. Some places where we're buying right now, not me, my clients are buying right now, they're seeing rents increase by $10, $20, $30 even in the last 2 months. Okay, even in the last 2 months. So clearly those suburbs are fine. The vacancy rates are less than 0.2%. 0.2%, not 2%, but 0.2%. There are literally hundreds of suburbs all over Australia where vacancy rates are really low and rents are still continuing to increase. So in these suburbs, there is no case of, oh look, everyone's lost their job, everyone's on the dole, everyone's forfeiting their rent, it's doom and gloom scenario. That's what the media wants you to believe. And yes, that is the case in some areas. I'm not going to lie. In inner city apartment areas, in areas impacted by hospitality workers, tourism sectors, all of that sort of stuff, it is the case. It's really bad to see. But there are still opportunities in the hundreds where there are suburbs like northern Adelaide, and still large pockets of Tassie, to some extent some regions of Brisbane City Council, 1 or 2 spots in Sydney, regional Victoria to some extent. There are so many areas where vacancies have continued to decrease. The vacancy rate has continued to decrease. So rely on the data. Rely on the data. Don't rely on the media. Don't rely on the water cooler chat that you have with a colleague at work and hear their horror stories. Rely on the data. Okay, so if all of these hundreds of suburbs where vacancy is less than 1% or 0.5%. Of those suburbs, you need to make a decision which are the areas that are also positive income or positive cash flow and that are also going to give you growth, not just in the long term, but in the short term, right? We need growth in the short term. We want growth in the short term. Now, we can't tell exactly what that growth is going to be, whether it's 2%, 5%, 10%, 15%, I don't know. But there is a way to find those suburbs that have low vacancy and apply a series of quantitative and qualitative factors to assess which of them are actually going to do well in the first few years. Okay, that is the most important thing. So first of all, don't be scared of vacancy, right? If you're leaning on the data, you will do well. The data is the data, it's real, okay? So lean on the data, not your fears based on what the media is saying. So lean on the data, but don't just go off one data source. Don't just go off vacancy rate, right? That's the other mistake that a lot of people make is, oh look, yields are high, vacancy is low, prices have been doing okay, Bob's your uncle, let's just go there. That's not the way to invest in property. There are hundreds of suburbs where vacancy is low, prices have been okay for the last few years, and yield is high. Hundreds of suburbs like that. But not all those suburbs are good to invest in, right? So whenever someone mentions those three data points and says, oh look, buy here, no, that's not all we look at. There are so many other things to look at. 30 to 35 different factors that you need to look at. But the main point of this video was not to go into all that stuff. The main point of this video was just to say that vacancy rate is what you need to lean on, not an emotional pull or push away from property investing. Okay, so if you're on the fence of, look, should I buy an investment property in the next 2 to 3 months or not, and the reason that you're thinking not to is because what if the tenant defaults, or what if I can't find a tenant, then really that's not a legitimate excuse, right? You need to ask yourself, really, why is it that I'm not investing? Is it because of that, which really isn't the case, or is it something deeper? Is it something else? Right? You can make a lot of money in property investing even right now. There are pockets of Brisbane, there are large areas within Adelaide, there's areas within Tassie, regional Victoria, still to some extent around regional New South Wales, close to Sydney, that are actually increasing in value in the last 3 to 5 months. In this whole COVID period, they have actually increased in value. Right? And you don't need to take my word for it. You should just go on and look at the data for a place like Northern Adelaide and just look at what the data, or Hobart. I'm not saying to invest in Hobart, that's not what I'm saying, but there are lots of suburbs within Hobart, as an example, that have continued to buck the trend and have increased in value in the last 3 months. Okay? So when you hear the media make these generalizations to say, look, property markets are crashing, just look at the data, look what it's doing. I actually had a client call last night, was it last night? Yeah, last night, or it might have been 2 nights ago, and you know, he was saying that, look, I've been hearing you loud and clear, PK, I know what you're saying, and I helped my friend do an auction, or go to an auction over the weekend, and I saw that auction, it was sold for, I think he was saying $150,000 over what he thought the reserve price would have been. It was in Sydney, I think close to Glenwood or somewhere around that. So he was saying, look, I heard you, PK, and I know that not all markets are being affected, but you know, I just took it as theory. But when I actually went and just tagged along with my friend to that auction, I saw that right in front of me. Like, we're talking metropolitan Sydney, an area that supposedly, you know, should have decreased in the COVID period, but it went for $150,000 over reserve price. He said, I think there was 10 couples there, or 10 or 15 people at the auction, and 5 bid, right? So this is actually what's happening on the ground. And if you're on the sidelines, or if you're being paralyzed by what the media is saying, then that's just not a good outcome. I'm having a bit of trouble turning, so I'm going to do that right now. Alright, so that's kind of all I wanted to say. Hopefully that was valuable. So if you're on the sidelines and fearful, guys, there's really nothing to be afraid of, right? If you're educated. If you're uneducated, don't invest. This is not the right time to be investing if you don't know what you're doing. You will be spit up and, what is that? Swallowed and chewed out, or I can't remember that phrase. But you'll be screwed, right? Don't be an uneducated investor in this current market. You can make a lot of money, but you need to be educated. Okay, so if that was useful, please like the video or comment below any thoughts on the market, any suburbs or anything at all. Otherwise, just get in touch with me and I'll see if I can help. Anyways, I'm almost here at my destination. Gonna play some soccer. Have a great Monday, guys. Catch you later. Bye.